Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital transformation projects, and we meet the innovators and entrepreneurs who make it all possible. On this episode, we meet Mike Kraus, an investor with TruStage Ventures, and we talk about their approach to making investments in fintechs. So if we're ready, let's suit up and get out on the field. Mike, thank you very much for joining us today. I really appreciate you joining us here on the podcast. Why don't we start by having you introduce yourself and tell us a little bit about what you do for TruStage?
Yeah, happy to, Kris. First off, great to be here. Had the opportunity to listen to several of your podcasts along the way, and think it's great. What you're doing. I think a lot of great information and your background is well suited for it. So appreciate you having me on. Maybe I'll start with myself and then can provide a little bit about TruStage and TruStage Ventures, since it'll add some good context for our conversation today. So my background is actually in finance. Got my undergrad and master's from the University of Wisconsin here in Madison, Wisconsin. Started my career at KPMG in Chicago. Was doing financial advisory work for private equity companies for about 8 years, but really wanted to see more of the operator side of things. So joined an early stage consumer tech startup, spent about a year there, absolutely loved it. Great insight into, raising capital and all of the challenges that go along with being an early stage company, but realized my calling was really more around M&A and investments. And so about 6 years ago, I joined TruStage, where I do venture capital investing on behalf of TruStage Ventures, along with the corporate development activity for our parent organization. So really great cross section of the organization where we sit, get to work across all business areas, get to do, work with the fintechs on the investment side, work with the credit unions on the partner side. So it's really a tremendous place to sit. For those of the listeners that aren't familiar with TruStage, so formerly known as CUNA Mutual Group, went through a really fun rebrand last year. Really fun to update, all of your collateral and try to let everybody know of your, new brand name. But we did that last year for a variety of good purposes. And what we are is we're a 90-year-old mutual insurance company that's based here in Madison, Wisconsin. What's unique about us is we have a footprint that's really unmatched in the credit union space. So we have kind of deep, long-standing relationships with about 95% of all credit unions in the U.S. And those credit union relationships are really the underpinning for our venture capital arm, TruStage Ventures, which was launched back in 2016. And so, back at the time, kind of recognizing both the fintech disruption that was happening, along with the fintech partnership opportunities, our executive team really felt it was important for our organization to be a fintech resource and a leader for credit unions. So at the highest level, at TruStage Ventures, what we do is we make venture capital investments in fintech companies that are addressing gaps in credit union technology, and then we help bring those solutions out to our credit union partners. So over the last 8 years, we've deployed a little over $300 million in capital and have invested in over 50 companies. So we've certainly been busy.
I'll say many times when you're speaking to somebody who's from the venture capital world, they have kind of a target they're looking for their investments. What are you looking for from maybe it's a particular type of service or, a maturity of the service? What are the typical parameters you're looking for that fit your investment strategy?
Yeah. It's a question that, on just about every pitch call we go through with founders of kind of what we're looking for. And we're very fortunate that we have a relatively flexible mandate from our venture investment committee. And our committee is really comprised of the C-suite of TruStage. So really, really well-rounded perspective on kind of what the organization needs, what credit unions need. We have tech perspective, all of that. But they do have kind of a flexible mandate for us, which allows us to invest kind of across stages. So I'd say we're relatively stage agnostic, Although I would say our focus areas really are more on the stage or Series A and B companies. Like to see companies that are, post-revenue generation, ideally have some partnerships with credit unions in place today. But what I like to highlight to credit unions is, there's really two different VCs out there. There's financial VCs that all they care about is a financial return, and then there's strategic, corporate VCs, which is certainly where TruStage Ventures fits in. And what that means is, look, we want to generate a financial return for the organization, of course, but we really have kind of a higher, a greater purpose than that. And that is to bring some of this innovation to the credit union space. And so kind of the big strategic check the box item is, does this technology help credit unions either today, or do we have a clear line of sight in the future? And that's really the lens at what we look at prospective investments through.
Is there, how do you understand, or how do you go about seeking and gaining understanding of what the credit unions are looking for or need that helps inform the investment choices you make?
Yeah, so a bunch of ways. So I'm very fortunate. I sit in Madison. Our entire team was in Madison pre-pandemic, and then I'm the lone remaining soldier here. But we bring in hundreds of credit unions each year into Madison to sit down with them. From an organization standpoint, but I'm lucky enough I get to sit with them and really pick their brains about what are the challenges you're facing today, what are the priority areas today, where should we as TruStage Ventures be spending our time. So I get to do that one-on-one, but more broadly for our team, we are at league events, we're at all of the credit union conferences. We have a bunch of credit unions where we've developed strong relationships with, where we just have quarterly touch bases that we get to hear kind of firsthand in a very candid way of some of the challenges that they're experiencing. And I'd say that informs our strategy more than anything else, is understanding where the pain points are, where the focus areas are. We want to be careful that we don't overreact to things. Like, right now liquidity is such a challenge in the space. We don't want to spend 100% of our time, solving for liquidity. And then, the cycle evolves and all of a sudden we got a bunch of deposit generating companies. But at the same time, we want to be cognizant that that is a real issue in the space. And we want to figure out ways that we can help credit unions solve that.
You mentioned deposit gathering. Are there other types of fintechs that you think are currently that you're taking a look at, that you're interested in making investments in?
Yeah, absolutely.
Not particular fintechs. Not asking you to divulge any particular fintechs, but particular services that you're interested in.
Yeah, absolutely. So, I think today, you hear the kind of the biggest challenges in the space. Of course, liquidity we just talked about. Fraud is also at the top of the list. So we made an investment in a company called DataVisor last year that, deploys various aspects of AI and ML to better predict and mitigate fraud for credit unions. And so that is, I think fraud overall is a focus area for us. I think we think about digital account opening or data and analytics as well. Credit unions sit on a trove of data, and they're oftentimes it's not the easiest to actually use that data in a productive, predictive way. And so figuring out solutions that, can better use the data and really enhance kind of the customization for members or the targeting for members is really important too. So, each year we kind of sit down as a team and we talk about general themes. I'd say that kind of informs our strategy, but we don't draw a box around those. Those aren't kind of the only areas where we focus on. But, those are a couple of the areas where we're, certainly a heightened sense of need in the credit union space today.
Does being a strategic investor for fintechs that are specifically looking to assist credit unions or institutions like them, does that change how you evaluate the investment?
Yeah, definitely. I think one of the I'll say that there's probably advantages and disadvantages on our side to being a strategic. I'd say, the disadvantage is, needing that linkage to a financial institution, being a B2B, software provider within fintech, also having, existing credit union partnerships. Like the population of fintechs that we're looking at, you start to cut down that 11,000, number down into, 1,000 or a couple thousand or whatever it might be. So we're limited in a sense there. But on the flip side, I think the demand for strategic capital like ours has probably never been higher. And so I think we get sought out a lot by fintechs and by other VCs that understand our presence and knowledge in the space and really want us to come along and help out where we can. And so from our side, those are kind of, some of the advantages and disadvantages. I'd say how we look at the companies, certainly from our perspective, changes as well. What I like to say is we like to invest in ambitious but not arrogant founders. We want founders where we can invest in that we can have a really strong partnership with and that we trust we can put those founders in front of credit unions and they're going to deliver a message that's consistent with the TruStage way. Our credit union partnerships at TruStage, they're our lifeblood. That's what makes us tick here. And we don't want to jeopardize those in any way. And generating a few fintech sales for our portfolio at the expense of a credit union relationship, not worth it for us. And so we really need to be intentional, really need to spend time on the diligence side to understand these offerings, make sure they're the right fit for credit unions, and make sure the people are people that we trust to put in front of our credit union partners as well. So kind of a heightened sense of scrutiny around that. Whereas, a financial VC, of course, that's important because that's all part of selling, but the overall relationship management and things like that might not be as scrutinized as it is from us.
Right. Are there other elements that you think make good fintech credit union collaborations?
Yeah, there's a lot here. I think, credit unions going back in history, I think credit unions are built on trust, right? And I think credit unions expect the same when it comes to their fintech partnerships. So what we've seen is, fintech leadership that have teams that are honest, they follow through on their commitments, they can build really, really strong reputations in the space and find it easier to gain traction. I know, Kris, you know just as well as I do, in the credit union world, your reputation, that is king, right? And making sure that you have clients that are going to stand up for you and really, go to bat for you when they're out and talking to their credit union peers goes a really long way in that partnership. And then, I'd say on the credit union side, it's important that you have board and executive team buy-in to solve, the tech gaps that exist. And it's really about prioritizing the pain points and then ultimately conducting, the proper level of diligence. I think credit unions, relatively risk-adverse group, not all of them, and I think that's changing rapidly. But, credit unions need to know these partnerships aren't without risk, but there's ways to manage such that it can be very productive and kind of stepping back and saying, hey, look, I'm not willing to take any risk. I'm going to kind of do what I'm doing. That's not going to work 5, 10, 15 years from now. And so understanding the right areas to take risk and how to mitigate that, I think, is important. And what I would say kind of overarching, we're fortunate enough in our portfolio to have a lot of really, really good collaboration between our portfolio companies and credit unions. And what I've seen be the most successful are the fintechs that are kind of there to answer the call 24/7. So you have a lot of fintechs that they want to get in the door, they sell, and then they kind of disappear. And when there's problems that arise and whatnot, it's kind of like, yeah, we'll pass you on to the B team and we'll handle it, later on. But what we've seen is those fintechs that can remediate problems in a very quick way and they really prioritize that relationship, it makes the collaboration and the partnership so much stronger. And so we emphasize that to our founding teams within our portfolios all the time is like
Mm-hmm.
in the credit union land, your reputation is everything. And the way to enhance your reputation is to be there, be responsive, make sure to prioritize credit unions. Don't treat them like a number, and really build that relationship, I think goes a long way.
Yeah, I think you also have to execute well.
You
You know
gotta
what I mean?
execute well.
You
Yeah,
got to
that,
you got to provide them a deliverable they can count on, right? I
that's
think
right.
that's a key part of it of establishing trust.
And I think on the product side, some of that in ways becomes table stakes, right? In the sense that you have to have a product that's going to generate value for a credit union. Otherwise, you're not going to be
Mm-hmm.
around long anyway. And certainly when it comes to renewal time and things like that, it's just not going to work. And so then it's, how do you differentiate yourself? Because there's more competition today than there's ever been in the fintech world. And I see RFPs go out from credit unions, and it used to be like there was two providers responding to them. Now there's 7 or 8 responding to them. And so how do you differentiate yourself? How do you give yourself a leg up? And that, again, I think comes back to that relationship and kind of the reputation that you built in the space.
Do you ever bring credit unions along with you on your investments? Like, are you a lead investor and then other credit unions will come in as a part of that round? Or do you only work with other, venture groups?
Yeah, so we like to work with both, and increasingly common. I'm sure, as the credit union investment has kind of risen in popularity over the last 5 to 10 years. So we have a handful of portfolio companies that we have invested alongside of credit unions, and to us, there's really no stronger show of support from a partner than if they're willing to put their own capital at risk to invest alongside and ride the wave
Right.
with the fintech. And so we've seen several portfolio companies that actually have board members or board observers that are from their credit union partners, and
Mm-hmm.
those perspectives in the boardroom can be invaluable. I think it's eye-opening at times from other VCs who aren't as close to the credit union space to
Mm-hmm.
hear about what some of the challenges are and maybe why the fintech is operating the way they are. The VC doesn't have the right perspective, and they don't have that background or that history. And so having that unique perspective in the boardroom can go a long way. I think on the investment side, the one thing I would say is just, we talk to so many credit unions that are interested in investing now, which I think for the right credit unions and the right fintechs, I think it can be super healthy and very valuable. But I caution that it's not right for everyone. It's not right for every
Mm-hmm.
credit union. I think there's a tremendous, resource constraint if you truly want to build out, an innovation arm that is deploying a lot of capital. There's a
Mm-hmm.
lot that goes into that. And I can tell you, doing this for 6 years, almost full time, talking to thousands of fintechs, having a team to support me and all of that,
Right.
it's really, really hard to get it right. And
Mm-hmm.
so for a credit union to spend a few hours and deploy capital, like it's going to be very, very hard to make sure that you're deploying it in the right way. And I don't ever want credit unions to feel like they're getting behind or that they need to keep up and they need to be deploying capital too. I think there's other ways to get involved with fintech to partner with them. You don't necessarily have to deploy the capital. And so always something kind of I caution against,
Mm-hmm.
certainly credit unions. But we love to see the collaboration. We love to see the increase in interest. I tell a story, that when I first started, my first speaking event was at like a New York League event, and the
Mm-hmm.
presentation or the title of the presentation that I gave was "Fintechs: A Credit Union's Friend or Foe," and now we look back and it's kind of like almost comical in ways because 80 to 90% of all fintech or credit union leaders will say that fintech's an important part of their growth strategy. And so just seeing that increased willingness of participation by credit unions is great in our eyes.
Yeah, I remember going to conferences in the early teens, and you'd see these slides that had all these logos on them, and they'd say, "These are fintechs, and they're coming for your business. They're going to
Right.
disintermediate you. Go home and think mobile."
Right.
Okay.
Right.
Thanks for that. Right. I'm
Well,
glad that's
and
changed. And I would agree with you. It has absolutely turned 180 degrees.
yeah, and I think if you go back and look at some of those logos that are on the 18 and 19, no longer too much of a threat, and on some
Yeah,
of those,
that's true.
which it just goes to show, I think, the staying power of credit unions and the trust that they built with their members, that is as important as the tech capabilities. And I think the tech capabilities at some point become table stakes here. Maybe they're beginning to become that, but I think that trust and the relationships still remain king.
How do you help a fintech start to work with a credit union? Like, how do you help them understand the uniqueness of serving a cooperative institution?
Yeah. So, we have an onboarding process,
Mm.
and we have our head of platform, Sarah Farino, who I'd argue is probably the most valuable team member that we have. She does a tremendous job of getting resources to our new portfolio companies. We have a fintech forum that Sarah has built out that has over 2,500 credit union representatives that have signed up for it. It's an online portal where you can go and get a bunch of information, and also allows the fintechs to learn about, how to sell to credit unions and what the current pain points are and things like that. We spend a lot of time introducing our portfolio companies to our sales teams as well,
Mm.
to talk to them about, how do we pitch a certain credit union, or what are areas we should focus on, or maybe not focus on, what's important to that credit union. And so, building those kind of relationships goes a long way, in kind of opening those doors, helps a lot. I think the benefit is most of the new companies that we're investing in, they've sold into several credit unions already. So it's not like they're starting from ground zero. But I
Fair
think
point.
through our investment, we can really help pour gasoline on that distribution, and really help bring their solutions out to market.
There was over the last few years, there's been a growing chorus of folks who are talking about the social responsibility of investing and using that as a lens to look through investments, right?
Yeah.
Um, is that something that TruStage uses to measure the value of potential investments?
Yeah. So, on something I think really unique that we did about 3 years ago is we launched a sister fund, which we call our Discovery Fund. And the Discovery Fund is really a commitment from TruStage to invest capital in very early stage companies that are backed by underrepresented founders, or are otherwise helping to solve kind of a financial access gap. And my colleague Elizabeth McCluskey, she runs this, and really has done a tremendous job building out a portfolio of really good companies backed by some amazing founders. And so,
Mm.
organization wide at TruStage, our mission is to make a brighter financial future accessible to everyone. And I think the Discovery Fund really lives into that mission. And what's been really exciting to see through that is we've seen several companies, so-called like graduate to our ventures fund. So we have companies like Beam, Pulsate, Xertu,
Mm-hmm.
where we invested very early on through the Discovery Fund, and then we've doubled down or tripled down through our
Mm-hmm.
Ventures Fund in later rounds, and are helping bringing those solutions out to the credit union space. Going back to kind of TruStage and our reputation, that is so critical to us, that I think whether it's in the Discovery Fund or Ventures Fund, investing in founders that we have that trust in and that are solving meaningful problems in the right way is really important to us. We don't want to shortcut anything. To us, it's not about a quick exit and getting a 10x return in a year or whatever it might be. It's really about doing things the right way, and we want to have founders in the portfolio that we trust to do so.
Mm-hmm. What do you think the future looks like between credit unions and fintechs? We talked about the past. right?
Yep.
What do you think the future looks like? And we're now seeing credit unions in some cases, like, the great work that April Clovis is doing at, Michigan State University Federal Credit Union, where she's building a portfolio of
Yep.
fintech services, right? What do you think, if you take a step back and look at the kind of relationships at scale and the trend and the history that's happened,
Yep.
what do you think the future holds for fintechs and credit unions?
Yeah, look, and what April and is doing at Michigan State and Reseda is one
Mm-hmm.
great example. You have other credit unions that are starting to do similar things where they're actually creating venture arms or
Mm-hmm.
deploying direct dollars like we talked about, which I think will only continue to accelerate. I think the overall momentum that we're seeing in the partnerships, it's not going away. What I say is, look, we live in a world where credit union members, they're not comparing their digital experiences to that of what they'd get at other credit unions, right? They're
Right.
comparing it to the digital experiences they have on Uber or on Amazon,
Mm-hmm.
that make it very, very easy. So they expect everything to be omni-channel, seamless, personalized. And we all heard the stats around, tech budgets for the credit union industry being half that of Chase Bank. You see
Mm-hmm.
very niche products that are solving specific things get funded with, $100 million capital raises by Silicon Valley. So for credit unions, or to think that credit unions are going to just build their way to tech platforms that are sustainable and that they can maintain and that are kind of
Mm-hmm.
cutting edge, I just don't know is realistic. Certainly
Mm-hmm.
not for any, but maybe a few of the top credit unions out there from an
Right.
asset standpoint. And so I think, again, kind of going back to the advantage that credit unions have today, it comes
Mm-hmm.
back to the trust that they have with their members. But that's only going to matter so much if they can't provide a tech experience that's at least on par with what the newer generations are going to expect, right? I mean, the trust is a great kind of entry point and a retention tool, but
Mm-hmm.
ultimately for them to truly stick around and to engage and to be, the concept of like a primary financial institution, although that's a bit out the door these days, but really for them to think of their credit union as their trusted partner, they're going to need those tech capabilities. The credit union is going to need
Mm-hmm.
those tech capabilities to be able to serve their members in the best way and the way that they expect. And so, going forward, I think we're going to see some consolidation in the fintech world across kind of different providers. I think that's inevitable. But I don't view the partnership model changing anytime in the near future. I really think partners, credit unions are going to have to rely on their fintech partners to provide these, good tech experiences. And I don't know that building is the alternative that would work for a lot of credit unions.
Right.
I'm curious, Kris.
Are the
You've built a fintech and you've seen the
Mm-hmm.
credit union side of things. How do you see it evolving over the next, call it, 5 to 10 years?
It's a great question. I think you're going to see credit unions. In some cases, they're already itching and starting to have this unsatisfied desire to connect to fintechs, right? And I think connections going to become particularly important.
Yeah.
I think you're going to see investments around connections become very, very important for them, because I think what they're realizing is that, to your point, they can't go out and build it all themselves, right? Even the biggest ones have tried that and they have failed, right? So what they need are ways of connecting to and delivering fintech services very, very quickly to meet their changing needs. I think at the same time, credit unions are going to have to partner together to do more of it, right? Because it's not, you made the case that it's a multi-round experience, right?
Yeah.
Yeah, this is and institutions who think you can go in and I can make a single investment and it's going to get me everything I want in one shot. And oh, by the way, support it and maintain it forever for me, right? that's difficult to do. And even fintechs have to go through and say, we're going to have multiple rounds of investment in order to be able to do those kinds of things. The good news is I think we're seeing them really start to embrace that and understand that.
Yep.
Right. And they're looking at it very, very strategically. I can't build it all. I need to partner and connect easily and move forward. And I'm seeing the value in working cooperatively together. Right. Yep. The emerging trend, I think, though, is really going to be around fintech usage in the back office. Mm-hmm. Right. So this concept that for so long we've been talking about the front of the house, right, where we were delivering digital experiences for credit union members. And I think one of the things we're going to start seeing is the realization that we've put very little of that investment in the back office. Right. And our employees have had to be the software that kind of ties it all together. Right. They are the interface. They are the API. It's a human API that ties it all together. And I think as we start driving towards needs for efficiency, we're going to start seeing a lot more investment happen in the back office. So I think the trend for me is going to be more partnership and connections on the front of the house, much more research and work happening in-house, working and supporting staff members to deliver really great experiences.
Yeah,
right.
I think, well said. I was just going to say on the connection point, going back to specific things we look for in prospective fintechs. I mean, I can't stress enough the integration piece of it is absolutely critical. Credit unions are inundated now by fintechs coming to knocking on the door and selling. And what I tell all the fintechs is you make the integration easy enough for the credit union and your adoption is going to skyrocket. And credit unions, they don't have the resources or the time to spend with 10 different fintech partners integrating into 4 different core systems and all that. It just doesn't work. And so the more ways that a fintech can offer their solution, whether it's fully integrated or partial integration or no integration, whatever it might be, so there could be like a crawl, walk, run model as well. All of that goes a really long way for these partnerships.
I think what's interesting from my experience is that we're now seeing fintechs show up with their own connectivity solutions, right? Yeah. So they are using some third party to enable their connectivity, right?
That's right.
So now if I'm a credit union where I used to try to say, well, my connection strategy was I'm going to have an API layer and I'm going to build these things. I now have solutions saying, listen, no, I'm bringing my own API integration layer and they're different. Like every vendor that's showing up has a different solution. So it gives a new challenge for credit unions to try to manage, right? How do you show up when everybody can connect? For so long, people couldn't connect. What happens when everybody can connect? And it's like, oh, good Lord, like that's going to be difficult to manage as well because it won't be the same for everybody.
Yeah. And I think something that will be fascinating to see play out is you have these major system providers, the core, the LOSs, the digital banking systems, that many of them have been around for decades, right? And really are the foundation for technology for credit unions. But some of them are a little bit slower to adapt to the new times or less willing or whatever it might be. And so I think what I've seen at least, a willingness to change core providers or LOS providers is probably more prevalent today than it was, 5 to 6 years ago. And I think a lot of that is driven by having open architecture, allowing fintechs to plug in so that credit unions can provide the right experience both for their employees and for their members as well. So I'm very interested to see kind of how that dynamic plays out over the next few years.
I think that'll be interesting as credit unions start to determine their own connection strategies, for sure, right? It all changes when somebody actually builds a headless core.
Yeah.
Right. And somebody delivers a cloud-based headless core. Right. And that's going to change. It's going to be an earthquake in our industry when somebody can deliver that.
Yeah.
The earliest versions that are out there now, we have some potential clients that are looking at them and they're not fully baked solutions just yet. Like you have to go get a different credit system. You have to go get a different member account system. You have to get they're not like the out of the box. I open it up, start it up and go. I think that's going to be really, really interesting as those become prevalent because you're right. You either have the scenario that says, listen, I am so willing to change my core to get to where I need to be. Or you have credit unions who are saying, I am so sick and tired of talking about the core. I'm going to make them just do transactions, and I'm going to use something for everything else.
Everything else. Yep, that's right. And you have a lot of these solutions that really provide an enhanced experience for everything else. It's just a
That's
matter
right.
of compiling them together so the credit unions don't have 20 different vendors for
That's right.
whatever it might be. So that's I think it's something that we're really interested in seeing how that's going to play out, and hopefully sooner than later on some of it, because
Right.
I think it would really be beneficial for credit unions.
For sure. For sure. Um, if you're talking to aspiring entrepreneurs, right? You're out engaged in the marketplace, and you get called into a meeting with aspiring entrepreneurs. What do you tell them about advice do you give them to be successful, either inside credit unions or just as entrepreneurs in general? We've got a lot of them who listen and who watch the pod. So you're speaking to them now. What kind of advice would you give them?
Yeah. So look, one, I'll be fully transparent and hesitate to give too much advice because I myself have never started a company and gone through that pain. And I have a tremendous amount of admiration for anyone willing to, take the risk to go out and solve a significant problem out there. And all kudos to all of those founders that have done that. But what I would say, from my shoes and my perspective, what I like to see are the founders that start the business with the goal of building it into a sustainable, profitable business rather than the goal of, hey, I'm going to start this business for a quick exit. And I think,
Right.
especially when they're selling to credit unions, I do think in ways intentions can kind of be deciphered about what the true goal is for that founder. And, no one's hiding, of course, financial is always at the top, right? But like,
Yeah.
do you truly want to be a long-term partner here, or are you trying to acquire logos so that you look really good for a potential exit?
Right.
And I think that does go a long way when it comes to partnerships. And we have a lot of founders in our portfolio that are, they truly love their business and they love what they do every day. They're proud of what they're doing. They want to grow the right way, like we talked about. So I think that is really important. I'd say the other thing is I think we saw in 21 and early 22 a lot of founders kind of come out of the woodwork that they wanted to start a company, but they were kind of maybe trying to figure out of like what is the problem that we're really trying to solve here. So maybe they went down the road. And what I would say is make sure that you can solve a problem in a way that is unique and defensible from the way that others are doing it. So we live in a world, right, where scale is mission critical to companies, and getting to scale kind of quickly is important as well.
Mm-hmm.
There's a lot of huge tech companies that are constantly building products and things. And so you need to make sure that what you're doing, again, is unique. You have a unique way of solving it, and that you have some defensibility out there. And then, the last thing I would say, which cannot be overstated, I think, is make sure that the network that you have in place is as robust as it can be. So this is going to serve you when you're selling, when you're fundraising, when you're hiring, when you need guidance, whatever it might be. But to have a really strong network that you can lean on and that you can leverage, I think is as important as anything else for aspiring entrepreneurs out there starting a business.
Yeah, for sure. You don't know how valuable a good network is until you start a company,
That's right.
right? Because your friends might say, "Oh yeah, I'll buy from you," kind of thing, as kind of being a friend. But the advice and the counsel you're going to get from a good group, a network group, is so valuable,
That's right.
so
And
valuable.
even just, opening doors for intros to others that may have
Yep.
been through something similar in the past. That's a
Yep.
big value that boards can provide or advisors can provide to
Mm-hmm.
companies, is just opening those doors. And I think sometimes we lose sight that it might not be as tangible, but I think certain connections like that can really chart the direction for some of these early stage companies. And so it shouldn't be overlooked. I think it is critical.
Yeah. Yeah. Well said. Well said. Um, Looking ahead, what do you think the future is for TruStage Ventures?
Yeah, so excited to see where we go from here, but I would anticipate it's kind of more of the same for us. So in 2023, we helped our portfolio companies secure over, I think it was close to 200 speaking engagements. Most of those were credit union focused, so kind of, again, them enhancing brand value is 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 a big component of that. I think we've made over 350 introductions from our portfolio companies to credit unions. Those are just ones we tracked, probably 2 or 3x that in reality. And we want to make sure we can continue this model of support, ensure that we're, adding value to our companies that we're investing in. And part of it is making sure we're not over investing, right? So we have 33 active portfolio companies today. We have 18 that are in the discovery fund as well. We want to be conscious that we can provide the proper level of attention and support to each of our companies that they deserve. And that kind of goes along with the investment that we make. And so I think everything we do is still going to be rooted in what credit unions need from us. I think we want to be viewed by credit unions as a strategic fintech partner for them, and kind of whether they're just starting out on their journey in the partnership world or maybe very experienced, we want to be there as a resource for them to help them along the way, and make sure that kind of all credit unions have somebody to lean on as needed.
Yeah, awesome. TruStage is such a great partner of the industry, Mike, and thank you very much for taking the time out to join us today. I really appreciate you and the work that you're doing on behalf of credit unions, helping these fintechs get engaged and helping them serve credit union members.
Yeah, absolutely, Kris. Thanks for having me, and look forward to hearing the future podcast here.
Thank you very much.
This podcast is sponsored by Constellation. We're empowering community financial institutions with innovative digital solutions, powered by fintech, driven by your roadmap. Join us as we navigate the future of digital banking together. For more information on how we can be your partner for digital transformation, visit www.constellation.coop.
Appreciate Mike for joining us today. It was really insightful to learn what TruStage Ventures is doing and making those investments in fintechs. If you like what you hear, please like and subscribe on your platform of choice. And don't forget to check out our audio and LinkedIn channels for additional bonus content. Thank you very much for joining us. We'll see you next time.